Hey there, Scrumptious Cookie. Look at you over there. Today, we're going to go through 4 truths about crypto investing, and there are many more out there. These are going to help you understand a bit more about yourself and investing in general. If you are experienced in investing, you'll know this, but maybe you'll learn something new too. So, number 1, prices going down feel 3 times worse than prices going up. Don't take this lightly. Everybody knows this. You know that if prices go down, you feel an eternity of pain. And then when they go up, you're like, yeah, it's kind of along the way. But this is going to be very useful to understand yourself, because when it comes to prices going down, and here is the Ethereum chart. I'd like you to know this is Ethereum in the previous bear market. Look at this vicious destruction, because Ethereum's a unicorn, right? So, Bitcoin was a unicorn, and of course, maybe we came too late, and now we saw Ethereum appear. It still made you get punished 94 to 95%. Absolute death, destruction. So when prices go down, the pain you feel is immense. When we go down, there's a big fat arrow like that. That is pain. And when we go up, it's whip like that. And I'd like you to understand this on a deeper level, because I'm going to tell you something. When there is upwards price momentum, you will never, and I mean never, you will never get an equal upside arrow as much as your pain. To be more specific, the pain that you felt in the bear market, in our bear market, in all of the death and destruction, the pain that we feel when we go up, you will not feel the opposite upside ever. And it's very important to know this, because most people will not exit. If you knew this, you will be able to exit earlier than everybody else. Because as a simple example, if we're watching Ethereum here, for example, Ethereum dropped 94%. And some people ended their lives. Very unfortunate. There was a lot of pain and destruction here in the crypto industry. So this pain, let's say it was 10 units, right? Minus 10 out of 10, right? Minus 10. When we go to the bull market, all right, the bull market, most people did not feel plus 10 up here. You see up here on the top right, friends, they did not feel a plus 10. They felt about a plus 3. Plus 3. It was great, because we thought it's just getting started. This was just the first wave. There's going to be another 2 to 3 waves, and then I'll get out. But that was the top, and it was all over. You see? So this is something to understand. You will never ever feel what you feel, ever, on the equal and opposite side up. You just won't. As you gain experience in investing, as you continue to like, subscribe, press the bell button and all, thank you very much. And as you remain a scrumptious cookie, you are not going to ever feel that plus 10. So you can't use yourself as an indicator like that. Instead, what you got to do is you have to look at other people. You see, other people, friends, this is the thing. Other people, they experience the minus 10 as well. They do. However, in a bull market, what happens is when people experience their plus 3, some of them go wild. Some of them are going to look like the party emoji. That's right. And some of them are going to have balloons and celebrations. This is laser eyes for Bitcoin. This is people putting certain memes. This is people doing naked handstands. This is people saying, we are going to infinite prices. There is no limit. Super cycle. Once these people experience a plus 3, it's like they've never been happy in their lives ever before. So they let everybody know. And God bless them. Thank you very much. They are signals for us to let us know that people are super happy, because they've never seen something like this. Now, why do they actually become our indicator? Well, that's because they weren't around in the bear market. The new people coming in were not around in the bear market. So all of us buying in the previous bear market, we got the minus 10, but we only feel that minus 3, and then we don't really get excited. We're like, well, you gave us a minus 10. You should be going to $10,000 plus Ethereum. After all the pain you put us through, we deserve to be higher. Most people who come in, they were not in this bear market with us. All right. They were not here, friends. They were not here at all. They come in at a different point in time. And that's why I've left it on a linear chart so you can show the appreciation. They come in after, you see this Bitcoin, this is Ethereum, $1,400. They come in when Ethereum's $1,000 and they're believing in the $10,000, $20,000. That's where they come in. These people, they don't know what it's like to sit through 2 to 3 years of pain. This is actually 3 years, like 3 years of absolute torment. Your soul is tormented. You want to cry from the inside from an eternity. That's how it feels like. They never got to sit through it. So as soon as they get like, woohoo, we're feeling the emotion. That's why you feel it. That's why new people coming in, they are our signal. How are they behaving? You're like, oh, you sound like someone who's never been in pain before. You're doing all these crazy, exuberant, irrational things. You're going heaps on leverage up here. You don't believe down prices can ever come. This is the type of thing we have to look at. And it all comes from that saying I just told you. The pain. That's why we can't use ourselves as an indicator, friends. We have to use other people. So this is the first adage, and you get to see this, right? And so we're going to look at something else now. Number 2, humans like to sell bottoms and buy tops. This is, of course, a very common thing. I mean, we all know it. It's funny, right? If we all know it, why do we all do it? And that's because of emotions. We all know it. If you were very hungry and there was a cookie on the table and there was no food in the house and you're really hungry, that cookie is eventually going to be eaten. Even though you know, maybe I should be paying a bit more attention to me diet. You know that. But you're like, hey, I was hungry. So this is what happens with asset prices. When asset prices go down, because we are invested, our labor units. So remember, we invest our labor units. We invest our labor units. What is a labor unit? It's just your money. It's your capital. I like using labor units because it makes it more real. Because you might work 2 months and you invest your 2 months of work into an asset, into stonks, into crypto. Right? So when we invest 2 months in there, you are believing that those 2 months of value is going to grow. So when it goes down, you are losing your time, you are losing your heart, and you are losing your soul. So when, let's say you bought in the middle of here, when Ethereum dropped from $700 down to, oh my God, down to $92, 90%, guess what? You invested 2 months. Well, now it's only worth 0.1 month. That's right, 10% of a month. So you invested 60 days. Now it's only worth like 6 days, 3 to 6 days, 7 days. You're like, oh my God. So think about that. You have now lost time. You have worked your precious hours on earth so hard and it's gone down. It's disappeared. All those blood, sweat, tears have gone. All of this summarizes itself and it becomes just one fear emotion in us. That's why we're like, oh, get me out. I can't take it anymore. I don't want to deal with this pain. That's where the pain comes from, friend. That's why we like to sell the bottoms, because other people are in the pain with us and they click sell. They want to cut it and there will be a knife emoji to signify that we are cutting away. We're cutting it out and we're just getting out. I don't want anything to do with it anymore. Leave. But of course, bottom sellers are toilet paper hands. Bottom pickers, very smelly. Bears are smelly. They poop in the woods, friends, and they don't make it, okay? Because eventually, one day in the future, maybe they're wrong and we go up. But in the heat of the moment, we want to get out, okay? This is something super important to know. Once you start to understand why this happens, you will increase the probability that you make it. Doesn't guarantee it. You just increase your probability because everyone knows this, right? You know this. We all know don't sell the bottom. Don't sell the bottom. What do we all see in 2022, 2023? Everybody sells the bottom. Everyone knows don't sell the bottom. Buy low, sell high. Buy low, sell high. What does everyone do? Sell low, buy high. Of course. All right. Now, number 3, friends, fix personal finances so you can hodl. So I am a special case. I am a very unique peanut brain. I am not normal. Don't look after me. I can be 99% plus in and I can deal with it. I am used to this volatility, but this is not normal. I am desensitized. Okay, I'm numb. Some would say, yes, it's just completely numb, concrete. I can't feel it anymore. It's not normal. For most people, what you want to do is just make sure your personal finances are sorted first, because there will be a time you sit in markets with high rewards like crypto. I mean, if it doesn't scam us for once, you will unfortunately have to sit through the Grim Reaper. And the Grim Reaper will capitulate you with time. And if your personal finances are sorted, then you can just, this is what my friends do, my very close friends, God bless them, this is what they did during these moments, these bad moments. You know what they just said? I'm not looking at it for 3 months. So they would ask me, they go, hey man, how's crypto doing? And I'll honestly say, brothers and sisters, let me tell you something. Don't look at your phone for about 90 days. Actually, don't even look in 90 days. On day 89, ask me if you should look at your phone, and I'll maybe extend it by another 90 days. And I'll be like, okay, and that's it. What a luxury. That's why if you go live a real life outside of crypto, outside of the Ponzi casino, and you just work a job, you don't have to look, man. Just keep accumulating. It's fine. You can go on holiday, hang out with your friends and family. You do life things, life chores. Leave this to the absolute degenerates to watch it every day to make sure everything's going. So if you handle your personal finances first, you will be able to increase your probability again that the power of hodling will be truly cherished by you. There's so much synergy that if you do all these things and you think about them first, you're sweet. So personal finances might mean if you think you have certain costs coming in 12 to 24 months, shave a bit off. If you have debt to pay, get that sorted first. You can do a lot of these things to help yourself. Also, if you have a choice between a super luxury premium item and you think, yeah, maybe I'm going to get over it a bit more, try to cut back on that. I'm not saying not to get that super luxury premium item. I'm just thinking, well, if you are able to invest in crypto, the excess of what you would spend, you might be able to buy 10 of those super luxury premium items. For example, I mean, there's some people out there, they want to blow like 30 grand on a watch, okay? What if you only blew like 10 and then you put the other 20 into crypto, and if it gives you like a 15x, then you could actually buy like 10 of those watches you want. This is something to think about. Now, in normal stock market world, we're only dealing with like a plus 50% or a 2x. But in crypto, we're dealing with like the potential to do a 10 to 15. So every $1,000 foregone matters a lot. It does. If we were only dealing with a 2x, it's not really like, it's not going to kill you. It's like, well, I was going to buy this 30 grand watch, or whatever item it is. So I spent 10,000 less and I invested it. Stock market gains, they're much lower, they're much slower. But when we're dealing with hypersensitive, hyper dynamite fireworks returns in crypto, or at least the opportunity, then it does make a lot of sense to really put some away so that you can have a proper shot at the casino, right? And of course, we're going to go through number 4. This is super important, friends. So handling volatility, it's tough in reality. You must risk the whole bullet. So in theory, volatility is like, it's sweet. Just, when it starts going down, get out, When it starts going down, get out. I mean, let me show you Ethereum, for example. Have a look at this, okay? Yeah, this is the Ethereum first wave. Like, look at this, okay? You don't know what's coming next. Don't you dare cheat. Look at this. Ethereum goes, you can easily do this. You go 1, 2, and 3, heads and shoulders. Okay, time to get out. And you get out here at $8 over your Ethereum. And then suddenly you're like, hey, it should buy back at $2. And you're waiting and waiting and waiting and waiting. And suddenly 2 months later, you're like, wait a minute. I was waiting for $2. Now it's $52. What happened? Do you see how you can't play this game? Because what does everybody do, friends, when they say, okay, to handle the volatility, what I'm going to do is I'm going to go put the chart at the very top and then I'm going to imagine myself selling it down. But look at this, okay? Look at this, okay? There is a topping candle here, right? There is a topping candle here, here, here. There were so many topping candles. I just showed you the early ones as well. I mean, here, Ethereum, topping candle at $40. Here is definitely like a giantly topping candle series, $10 to $15. So all these people, they don't know what really is what's going on. They're just using the benefit of hindsight. So in actuality, what you got to do is when you enter, you got to risk the whole bullet. That's what I said here. You must risk the whole bullet. What do I mean by that? I know everybody says, well, if it goes down, you got to take your risk. Look, in crypto, it doesn't matter where you get in. I mean, look at this. Okay, I'm going to show you the chart here. This was the bottom, right? The bottom of Ethereum. If you got in here, let's say you just got in here, look how far it goes down, right? It went down 70%, right? 70%. Tell me, where are you going to take your loss, right? Let's say you're in here. Where are you going to take your loss? Are you going to get out here and then buy back in? What, you're going to be a genius and buy the lows? No, you're not. What if you bought back in here? Okay, it goes down another 30%. You see? So just imagine you got in here, you take minus 20% loss, and then it stops here for like a week, and you get in there, and then look how far it goes down again, another 26%. So you go, okay, I'm going to take my 20% loss again. You've now chopped yourself twice, but guess what? You're actually selling the bottom. Where are you going to get back in now? Are you really going to get back in here? Let's say you got back in there after its reversal. Look at this. It goes back down 20%. It literally goes back down and pings you 20%. So here you go. And so like I've just done 3 examples here for you. 3 examples that look like such small distances on the chart when you look like a genius. But if you zoom in, that's 3 times you went minus 20%, minus 20%, minus 20%, and then you actually selling the low. Where else are you going to go now? Well, and by the way, do you really honestly think you're going to watch Ethereum go all the way to $300 and sit there going like, aha, I will be a good, sturdier student and I will rebid the low at $100? No, you're not. No, you're not, okay? Everybody thought we were now out of the bear market here. Everybody thought the low was in. Here's $220. You got to buy back in here, okay? And guess what happened? If you bought back in, see you later. Minus 40%. Are you going to take your loss again? Okay, look at this. This was the Bitcoin halving run. Oh, zombie virus comes. Minus 50%. What do you do, friends? I'm telling you right now, that's why you have to risk the whole bullet. So I've just went through with you, showing you the unicorn. This should have been the easiest of all. It was the easiest. Technically, it was the unicorn run. Okay, it's a blue chip. Ethereum had developers coming in. It's a blue chip. It invented DeFi, had all these things going. Vitalik is an alien. His brain can't even fit in his head. Every single thing is telling you to keep your back straight, keep your fuffy zippers on, and this thing is going to the moon. Okay, well, not really. I mean, it did for me, but for everybody else, it's still, no one was a believer. But technically, if you looked at the data, it should have been easy. But look, I just went through this. You took 5 losses, minus 20%. 5 losses. So what do? Well, you just got to risk it all. I know that's not what you like to hear or what everybody thinks you should hear. But yes, the answer is you have to play it asymmetrically. So you say, okay, if I invest, there are 2 scenarios. If I win, okay, if I lose everything. So I lose minus 100%. Minus 100%. But if I win, it is asymmetric. Do you see this big arrow? And you might say plus 1,000%. Yay. That's actually how you win, right? You're risking the whole bullet. And then if you win, you get 1,000%. Now, unfortunately, crypto is diminishing so hard that we can't even get these 10 to 1s anymore. And I know you believe we will, but there are no guarantees that we get these 10 to 1s. You know, back in the day, it used to be not 1,000%. You used to be able to get like 30,000, 3,000%. That's the 30x. So this is what it used to be for all the altcoins. Not just like 1 or 2 here and there. Like every single altcoin could give you a 30x. The whole cycle. Doesn't matter where you got in. The real number was 70x, but I just divided it by 2 because I'm assuming you got a terrible price in the bear market. How about that? You used to get 30 to 1. You know what we're looking for now? We're lucky to get a 10. We're lucky to get a 10. We're probably not going to get that because you and everybody else, we are long from somewhere halfway in 2022's prices. So I'm assuming you buy the low, which you never do. So this is another harsh reality we're just going to have to deal with, friends, that the returns are diminishing all the way. But hey, you've learned something here. You've learned something about yourself. Right? Price is going down. We can't use everybody. We can't use ourselves as a signal. We have to use everybody else. Okay? Because price is going down for us. It's going to feel 3 times worse. Okay? Number 2, people like to sell the bottoms and capitulate. And they like to buy the tops because they're cheap. Number 3, we got to fix our personal finances so we have the strength to hodl. And of course, number 4, in reality, volatility is very tough to handle. So what's the answer? The answer is you got to do textile investing. And that is you got to risk the whole bullet. And you got to hodl the whole way. Very controversial, but hey, you can do what you want. I love you very much. Doesn't matter how much money we make, friends. You are worth more than money. Tell mum and dad that we love them. Like, subscribe, press the bell button and all. I'm going to catch you in the next one.